Hi everyone, Aussie Dollarman here. Welcome to another episode of the Forex Form Guide. Plenty to chat about this week. Another wild week on the markets. We'll review the market action. I'll follow up on a video that I posted on Wednesday where I take you through a trade that eventually returned over 20 to 1 in 2.5 days. So not a bad trade to have in your trading arsenal. And finally, we'll take a look at what's potentially coming up for the Forex markets this week. Thanks for joining us. Before we get going, a quick disclaimer. This video is for educational and informational purposes only and should not be considered financial, investment, or trading advice. Bottom line, as you can see there, do your own research. This is not financial advice. Trade responsibly. So in this episode, we're going to take a look at the Aussie dollar, US dollar, the pound US dollar, the euro US dollar, and the US dollar Japanese yen. We'll start with the Australian dollar. On Wednesday, I posted a video called A Double Bottom on the Australian dollar. If you haven't watched that, I'd encourage you to look at it. Bottom line is I walk through a double bottom setup on the Aussie dollar, US dollar, but I look at it through some different time frames, and we were able to get the risk down on this trade to a fairly low amount, not the lowest risk that you'd want, but fairly low risk, and a massive 16 to 1 reward to risk ratio on that trade. So that's a snippet from the video. That's when I posted it on Wednesday, and you can see the calculations that I did there using the 15-minute chart entry resulted in a reward to risk ratio of 16.18 to 1. And with an additional trade taken along the way, was able to bump that up to over 20 to 1. Now that's in the bank. That's taken. The profit target was touched on Friday night. So in 2.5 days there, a reward to risk ratio of over 20 to 1. If you're interested in that, check out the video, A Double Bottom on the Aussie dollar. It's on the channel. For those who did follow it, and I know a number of you did, basically there was the double bottom there. You could have added on a first higher bottom entry there. Again, talks about the first higher bottom or the first lower top being the safest place to enter a position. Then from there, we had another couple of higher bottoms, and then whoosh, the market shot up there very, very quickly in this hour, going up over 1.5 cents. Flatlined a little bit, and then gradually made its way up until touching that profit target on Friday evening around 10:11 p.m. Along the way, we hit a couple of important milestones. I'm not going to go through these because this is proprietary content from Safety in the Market, who I did some education through. If you are a Safety in the Market student, you might recognize why, for example, this low was important and was a great place to add to your position, and why, of course, this low was important, and why the final profit target was important. It was a 75% retracement that I was targeting from the run down there, running up there, a simple Gann retracement on a ranges resistance card there. Obviously, there was more stuff going there as well, but I'll leave that to you to check it out. So for me personally, having missed this rundown here, if you missed last week's episode of the Forex Form Guide, I was out on an adventure with my 2-year-old toddler, having a wonderful time. So I missed the trading setup there. No big deal. I was actually talking to a friend of mine who did the opposite. They nailed this rundown, and then also looking after a 2-year-old toddler. There you go, 2-year-old toddlers, not great for trading, but wonderful for the soul. They missed the run up here, so I said we should combine our forces between us. We'll get all the runs up and down. But seriously though, as a trader, you are going to miss runs. One of the things that I love about Gann analysis is that you know where your dates are for the next turn in the market. So if you miss one, you just sit back and you wait for that next trading opportunity. You know that it's coming. It's always coming. Usually in the next fortnight. If you miss a trade and you're thinking it's the end of the world, don't worry about it. Almost always within the next fortnight or so, you'll get another good trading opportunity. Just wait for that. Or if you're in a hurry, trade something else. So that's the trade on the Australian dollar, 2.5 days there. It took a couple of days to set up. On Monday morning, as I discussed in the double bottom video, we had a gap down, a little bit of mucking around. It looked like it was getting ready to wind up and have a run to the upside, but that failed, cleaned out those lows there. Once that happened, it was a pretty good bet, in my opinion, that we were going to run down and break that low there. It was just a matter of waiting for it to happen. It finally happened on Wednesday morning. The low came in at 10:19 a.m. So again, about 2.5 days from the low up to the top there. Now, that's been a very strong run. If we look at it on the big picture, you can see there's our monthly chart. We had been running down. We had a lower top on the monthly chart, down below that 75%. Well, now all of a sudden we're way back above there, and we're trading near the high of that bar. Similarly, on the weekly chart over here, we ran 200% down in time and price of the previous swing there. So it had been going a long way compared to that last swing. So at some point, it was always going to have a pullback, but that's a very strong pullback now. We're seeing what Gann would call an overbalance in price running up here on the weekly chart. It's a little bit more clear on the daily chart as well there. There's that 75% retracement. It's shot through there. So I've taken a profit there, and the market's continued up there. as a trader, I was looking for the 11th of April. I got this slightly wrong in last week's Forex Form Guide, so I apologize for that. I had the dates slightly wrong there. If I had them correct, I would have nominated. I had the 8th and I had the 16th, but for some reason with my 16th date, I had the 14th and then I turned that into the 12th. So I made an error on that, so apologies for that. I got that one wrong. But I was looking around that 10th of April for a decent low on the Australian dollar, and we do have that. That happens in trading. If you're wrong, generally speaking, you lose 1 unit of risk. You take a trade. Sometimes you don't take a trade. It's not there. But you're wrong. You take a trade. Not the end of the world. In this case, it wasn't so much that I took a trade and lost. It's just that I missed the run down there. And I was watching it. And then I saw that double bottom there. Came together very nicely. Nice, simple entry. And bang, off you go to the upside. Now, I think that is the low for April. I don't think we're going to break that low this April. I'm not convinced it's the yearly low. As I've mentioned earlier, I do see a crash coming on the Aussie dollar, bigger than what we've seen by a long way later this year. But in the meantime, that's the low that I thought February might have been. I think we'll see a decent sort of a run up from here at least. So we'll keep an eye on that. As a trader, for me, I see this daily swing that we've run up here way bigger than the last daily swing that we saw running up there. At some point, it is going to have a pullback. So how I treat this as a trader looking for the next opportunity is I will run a ranges resistance card over that, and I will just break that range into eighths. Maybe we go up on Monday. I think we will go higher on Monday. So if that happens, I'll just put the top of that ranges card up to the high. Wherever this swing ends, as high as we go, put the ranges card on there. That gives me some targets to watch on the way down. And if I can get a cluster of prices happening around one of these levels, I'll look to take a trade at that point. For now, though, I can sit back and enjoy my 20 plus to 1 reward to risk ratio trade. It's been a bit of a tough year on the Aussie dollar. It's hard to get a big reward to risk ratio trade in a tight, choppy sideways range. But there you go. If you wait long enough, you'll get what you're looking for in the market. And there's another thing to remember too. We talk about FOMO, or fear of missing out. Just remember that good trades do come and you will get on them. You just have to wait for them sometimes. Sometimes they take a little bit longer. In terms of some time on the Australian dollar, for a smaller cycle for the next little bit, as I said, I think we'll be running up for the rest of the month on the Australian dollar and probably into next month as well. But just for some smaller dates, I'll be looking for a high around Tuesday, the 15th of April, and a low on Monday, the 21st of April, give or take, and then a high up into early May. Those are just some dates that I'm watching on the Australian dollar. At the end of the day, the form reading on the market, looking at my swing charts, the ranges, the signals the market gives, counting sections, looking for market patterns, all these sorts of things that Gann talks about in his books, that's what I base my trading off. When we approach dates in the market that could offer a turning date, I zoom in a little bit and look for those opportunities, see what the position of the market is like. Let's move on to the British pound now. And the pound is still shaping up for a potential first lower top trade on the monthly chart here. Not much has changed there, but you can see on the weekly chart, we had a very strong bar. After that signal bar that we saw last week, we opened, we ran down a little bit at the start of the week, and then bang, we've had a really strong run up there. On the daily chart, again, it was looking for all money, like we were running down and we'd have a little lower top and then bang, heading to the downside. But we finished the week, particularly Thursday and Friday, with very strong bars there. In a minute, we'll look at the euro, and it's actually taken out a whole bunch of tops there. That's looking very strong, probably the strongest out of the three currencies that we've discussed so far, the Aussie, the pound, and the euro. But if we use that as a bit of a guide, it wouldn't surprise me if the pound continues running up now. We got a little bit of a taste of that. Last week, I was looking for the market to pull up around the 131 level. We shot through there to 132. Still within 1% of the target, so I could have lived with that. But it did make me wonder at the time, are we actually going higher here? Now, running down, and then we've almost retraced all of that down move there. That's starting to back up my thoughts that we are running higher here on the pound. What I'm going to do is look at these two charts side by side. I've got a weekly chart on the left, and I've got a daily chart on the right. On the weekly chart, you can see we've had a very, very strong run up. What I like to do is break that down into daily moves. So there's your weekly. One time frame below a weekly, I would say, is a daily. Someone out there might have a different time frame they would use as one time frame down, but for me, I have all my time frames lined up. I'd go from a weekly down to a daily, and you can see that so far, this weekly bar, it opened, made a weekly low down here, and then it's run up here. That's a weekly bar chart low. It's not a swing chart low just yet. But so far from the low there, that's all one daily swing up, and it's an expanding run up, so it's larger than the last one up. So I'd say there's a good chance at some point it's going to end. You'll have a pullback, but I think there's a good chance it'll be a higher bottom and then continue to the upside there, a bit like on the Australian dollar, but just there's probably a slightly stronger position than the Australian dollar. Okay, so that's the daily chart. Now I can drop down again, and I've got my daily swing here, which we just looked at, and I can break that down into 4-hour swings, which we see here. And to me, this looks really strong. As I said, at some point that's going to have a pullback, but I reckon that's got more upside in it before that starts to pull back. So again, could be a pretty bullish month. And isn't it fascinating the way that things turn around? A week and a half ago, you've got all the talk that all these tariffs Donald Trump is putting on all these different countries. It's going to crash the economy, the global economy. We're going to have recession. Everything's going to turn to rubbish. Everything's going bad. And then here we are a week and a half later. The tariffs have been paused for a lot of countries, except for China, and the markets have turned around and just shot right up there. Now, again, that's going to be very interesting to see if we continue here. We know from experience that the White House or Donald Trump himself can put something out there and the markets will turn on a dime and they'll run hundreds of points against the trend there. So you don't get cocky in a time like this, but it is starting to look like the energy has come back into the currency markets. If you haven't seen it, there's a video on the channel in the Guidance for Gann Researchers playlist on the WD Gann Ticker and Investment Digest article that talks about the law of vibration and that sometimes markets will go flat and other times they'll be very highly active. We do appear to have transitioned from a slow and sideways market, particularly on the Australian dollar. There seems to have been a big change and we're now seeing active markets, and that's great for us as traders because active volatile markets have more potential for profit. Sometimes the entries can be a little bit harder to get and the risk can be slightly higher there, but generally speaking with those bigger ranges, we do have more opportunities to make some money there. But again, here on the pound, that to me looks like it's got more upside before it has its pullback. And just like the Aussie dollar, I'd run, when this move eventually ends, I'd run a ranges resistance card over the daily chart. As I do on all my ranges, I'm always interested, where are we at compared to the previous range? Always interested in looking at that and using it as a way to rate the strength and weakness of the market. So funny, last Friday or Saturday, as I was recording the Forex Form guide, I was looking over this little lower top here thinking, gee, that would have been a nice trade to be on, 400 points down. Well, that top's already been broken there. We've had close to, not quite, about 450 points up, not quite 500 points up, and looking like there's more to come there. So things can change very quickly in the markets. This technique that I've been showing you, looking at the different swing charts and bar charts side by side, that's part of a larger skill set called form reading. You can learn all about that in WD Gann's book, How to Make Profits in Commodities. He does write about it in most of his books and courses. I like the version in How to Make Profits in Commodities. You can grab a copy of that from wdgann.com. Personally, I learned it from Safety in the Market and their Active Trader program. You can check that out at safetyinthemarket.com.au. Just before we move on to the euro, I do have to say I've completely forgotten everything that's happened in the first half of this presentation. Just spent 6 hours in the emergency department. My daughter got croup out of nowhere, which is a little bit frightening, but she's okay. Everything's good. But it literally happened mid-recording. So I was starting the euro and I heard it and that was it. So I'm going to pick up and continue with my presentation. It should all still be there, but if the flow seems a little bit off, you know why. All right, let's get into the euro US dollar now. And you can see that's probably the strongest out of the Aussie, the pound, and the euro. It's broken these tops here, this one here, this one here, this one here, and it's closed very strong on the monthly chart, very strong on the weekly chart over here. That's looking pretty strong. Now, the euro is up here. The pound is a lower top. And obviously the Australian dollar ran down and then is a failed run down. So it's actually a lot further down. But so the euro is looking the strongest out of the lot. We'll do the same thing for the euro as we did with the pound in a moment. We'll line up the charts side by side. You can see this weekly swing up has been going for a while. So at some point it is probably going to pull back. Maybe that's a false break up there. I don't know, but it certainly looks pretty strong to me. If we look at them side by side, there's the weekly chart. Again, there it is. That is all. It's coming up from about 107.50, which is over here. That's had a couple of daily swings there, maybe a bit of a pullback and then more upside there, but it certainly does look strong. Having said that, things can happen very quickly in the markets. And should we have a bad start to the week, we're all the way back down here, maybe we kick on and we keep going. With trading, if we go back to the double bottom trade that I spoke about on the Australian dollar, US dollar, they're the sorts of trades that I look for. 10, 15, 20 to 1 reward to risk ratio, because I don't know any traders who get it right all the time. You look at the best of the best traders. Gann, he had about a 90% success rate, and that's at his peak. We don't hear a lot about when he went through some of his tougher times and was struggling with things. So you have to assume that you're going to get it wrong at times. That's why I like to aim for a larger reward to risk ratio. So in cases like this, A, I'm probably not even going to be trading the euro, but B, on the Australian dollar, if I'm wrong, it's 1 unit of risk, whereas I've just banked over 20 to 1 in my favor on that trade. It takes a lot of 1 unit of risk trades where you line everything up, it looks good, you get your setup, you get in, and then you have to be wrong 20 times just to wipe out that one profit there. And I haven't been wrong 20 times in a row if I'm following my rules. So there on the weekly chart, we are well and truly into this swing. This is why I don't like buying as old tops are crossed in most cases, especially this case, because where do you put your stop loss? It's so far back. The top's there at 112. Your nearest daily swing is down at 108, just above 108.50. It's 350 points away. You're just not going to get a good reward to risk ratio on the trade. And the aim of trading is to get you from point A to point B, wherever your goal is. If you've got a $10,000 account, you want to make $10 million, well, there's your point A and your point B. Your job is to get there any way that you can. And if your trading style is to wait for these little pullbacks, and maybe you've found a way where you can nail these every time, well, great, you just nail them when they come and you wait for the next one, wait for the next one. It's not about saying, oh, I got in the low here and I sold at the top here, look how smart I am. That's not your goal in trading. Maybe it feels good to do that, but that's not your goal. So in this case, it's run so far up, I wouldn't be touching it at this point. I'd be waiting for a pullback and then carefully assessing that pullback. So there's your daily big swing up there through the tops. And if we look at that on the 4-hour chart, that's a pretty strong 4-hour run up. We do have this little outside bar here, so maybe that's your failed run up and that's the end of the daily swing there. That's how I'd be reading it, but I could be wrong there, we'll see. Next one is the US dollar Japanese yen. As I've been saying the last couple of weeks, it just looked like it was starting to tip over a little bit. So you had your monthly swing down and a run up and a little failed run up there. That's all fine. And then a down bar that wasn't overly strong, a down bar that was hovering around a resistance point there. And then all of a sudden, you've got another down bar last week, and we're right near these lows. In fact, it's around an 87.5% retracement. In most cases, not always, but in most cases, once you break 75, it's going to break that base there. So unless we're setting up for triple bottoms here, that's looking like it's just going to kick on to the downside there. So I'm seeing signs of strength, at least for the short to medium term, on the Aussie, the euro, and the pound, and signs of weakness here on the US dollar, Japanese yen. Okay, so let's have a quick look at the economic calendar. Not a lot happening this week, thankfully, although stay tuned for more tariff announcements and tit for tat and all these sorts of things that are going on there. It's not till Wednesday afternoon, Sydney time, we get our pound CPI figures, and then in the evening, the retail sales, and then the monetary policy report, the rate statement, and the overnight rate for the Canadian dollar, expected to stay the same at 2.75%. And then on Thursday, Sydney time, Thursday morning, 3:30 a.m., we've got Fed Chair Powell speaking. New Zealand CPI, that'll be an interesting one for the Australian dollar, the 17th of April. You've got the employment figures coming out for Australia. Unemployment expected to tick up a little bit, so that'll be one to keep an eye on. Euro rates on Thursday evening, and Euro press conference a little after that. But that's really the calendar for the week, so a lot less than some of our more recent weeks. That's all for the Forex Form Guide. Apologies for the euro and the yen sections being a little bit short, maybe a little bit disjointed. It is 5:30 in the morning as I'm recording. This is my last chance to get it out by 7 p.m. Sunday. I normally do these on Saturday nights. A bit hard when you're in the emergency department. But anyway, everyone is all well and good. Thanks for watching. Until next week, have a fantastic week. All the best with your trading. If you haven't watched the video on the Aussie dollar, US dollar double bottom, make sure that you do, unless you're already taking loads and loads of 20 to 1 reward to risk ratio trades. You might find something useful in there. Thanks, everyone. I'm off to bed while this processes. All the best and bye for now.